Morning. Good morning, chat. How are we doing? I always say morning, but it's not morning. It's 2:30 on a Sunday where I am. So it's mid-afternoon. This is the time in my day when I spend half an hour just going over the charts of the previous week. So it's an opportunity for you guys to jump in and what I do. If you have any questions, as always, feel free to ask away. But how's everyone doing? Everyone all right? Everyone good this morning? Everyone feeling fresh? What do you think of the new chart setup? Yeah? Hey? What do you think of the new chart layout? It's new colorways going on. New aesthetic. This is what I'm going to be running next week. This layout. But still weaning myself off my old layout. So I guess we can start with Friday. Why not? Start off where we left off, right? So as you know, as I've been calling all of May, my weekly objective, or my long-term objective I should add, is all the way up at 25.40. I've explained reasons in previous weekly reviews, and that objective is still not changed. So all of last week, I was essentially waiting for pullbacks into higher time frame X levels that align with PDRAs, in alignment with the schematic, throw time over on top of that, and then use the principles of what we teach inside of red pill trading to trade long. Okay, so every single trade pretty much that I took last week was long, just waiting for pullbacks to trade long. And so Friday, I didn't actually trade Friday because it was the day after Trump did his announcement, and just anticipating the world wanting to be long, which was the right thing to do. Still anticipating bullish price, but just anticipating them just to screw everybody over who was trying to push longs on Friday. So yes, a week of consolidation essentially on the higher time frame on the daily. But yesterday, or I should say on Friday, we just consolidated. The mechanical TS model did deploy though. However, if you were trading Friday, which would have been a beautiful trade if you took it, and we can break down that, and then we can start looking at go back through the week, I guess. So if we just utilize the principles of X levels, right? I was talking at the start of the week, I wanted to see a Tuesday low of week. We actually came in on Wednesday. We actually got a Wednesday low of week. So if we're talking about X levels, this is our dealing range on the daily. So this low to this high, and as we know, we always want to be at a higher time frame X level, and then define our PD rate at that higher time frame X level. So on the daily, we came all the way back to fair value, so 50%, which is an opportunity for the institutions to step in. It was also at 79% on the discount side of this weekly dealing range. So we had a crossover on our X levels, and it was also a fill on this daily volume imbalance. But then on Friday, turtle soup in this high. So let's just break down this. So the mechanical TS. So if we go right into your hourly charts and you look up here, this is where you're looking for your divergence on the hourly. This is my mechanical TS model, which I developed. Live your life. It's a completely different setup, broski. New aesthetic, new colorway, everything. This is what I'm running next week. So, and then you're inside of here, you're looking for your lower time frame breaker block, right? So if we just hop down onto the 5, this is on Friday. So your higher time frame turtle soup is in on this high. You're going to measure out this range, and then you're going to look for your 2x and 4x. That becomes your objectives. So you want to always ask yourself, what context do you have for why price is going to deliver lower? Like, why? Okay, so for me, it would have been pretty straightforward if I was trading on Friday. You had a failed M5 cont for those inside red pill trading. Would have given you context for lower prices. And then you had your confirmation of your mechanical TS short up on the high to go and drive out the low. So that would have been a really, really clear trade. I think I've seen, what's his chops? ICT talk about a new thing. Not that I need it, but it's just for your information. You could have utilized this inside of your mechanical TS, which is, you know, the first 15 seconds fair value gap after 10 a.m. after you've had your sweep. So inside of here, there's your 15 sec, your first presented BISI, which then becomes balanced price range, inverted fair value gap for lower prices. It's not something which I particularly use, or will use, but it was there for Friday. I'm personally in here if I'm trading, right? If I'm trading my mechanical TS model, I want to be in here versus anywhere up here, and I'm scaling out. So if we just rewind this, let's have a look at the X level. So I do this all. I'm doing this all live with you. Like I don't preamble this before I come on. I'm just shooting from the hip. So if you guys have any questions or queries, it's your opportunity to ask me, right? So as you know, in terms of X levels, I just wouldn't enter anywhere in between the two. Essentially in between premium and discount of a high time frame dealing range. So there's just absolutely no way that I'd enter inside of here. Just wouldn't do it. End of. Right? It's like my no-go zone. There's only certain times I do enter off fair value, and it's when I'm anticipating range expansion. We've already done manipulation on the low. So I'm not going to be entering inside of I call them in between the 262s, but because it's old school. Because old school, I used to just flip my DRs over, so I'd have the premium and the discount. They'd just be flip percentages, but it's actually 38 and 62. So in between the premium and the discount side, I just don't enter inside of that. Inside of a higher time frame, X level. And if you remember, a higher time frame is anything 15 and above. So 15 hourly, daily, weekly, monthly. I do not enter inside of here if I'm anticipating consolidation. Well, I wasn't anticipating Friday to be distribution any longer because of what I've just mentioned about Trump on Thursday. So inside of here, no interest. So if I'm going to look to go short, I'm going to look to go short inside of a premium or a discount. Okay, now if we're looking at this 15-minute dealing range, okay, this is a discount, this side, and this is a premium. Why? Because this is a bullish break of market structure. So it's a bullish dealing range. Okay, so if I want to be short, I want to be short inside of a premium. Well, the deep premium on X levels is 12%. Okay, so if I wanted to enter hyper aggressively, I'd be entering right there on my turtle soup. Right, so there's your TS. Okay, so inside of here is where I'll be looking for my high time frame sweep, which is what you actually get if you go to your hourly chart. I don't actually have my hourly chart on this pane, but if you go and look at your divergence, you'll see it between these two. All right, let me just bring this chart up for my own view, I should say. Yeah, so right in here. Okay, so right up in, so you now know that you're in a deep ass premium. Okay, so this is what you want to align it with a PD array. Okay, so what PD array do you have there for why price could respect it? Well, it's a fill on this SIBI on the daily, right? Okay, well, if you're inside red pill, you'll know that 3 OBs, the middle SIBI is your SIBI which you're looking to hold for lower prices. Okay, you don't mind it wicking the SIBI or BISI. In this instance, it's a BISI, which is now a inverted fair value gap, and we're filling that. Okay, so if you're not anticipating range expansion, you're now inside of a deep premium. Well, this is an opportunity where you could look for a setup short. Well, this has now just delivered it to you. It's just offered it to you on a plate, right? You've just got your high time frame confirmation. Now you're looking for your distribution, right? Now you're just looking for your distribution. Okay, so very, very simple. Either enter up inside of your high time frame premium, or this is where you can start waiting for your lower time frame breaks of market structure. Well, it's tricky because your 1 minute, 5 minute are exactly the same. Okay, often you'll have it where the 1 minute is inside the 5 minute naturally, but because of this huge wick that we got, the 1 minute and the 5 minute was essentially the same. Okay, so the X levels that you're utilizing, you're essentially utilizing the same across all of them, right? Apart from the 15, which is slightly wider, right? Slightly narrower, I should say. So what you can do is you can actually hop down to the 15 seconds. So if your 1 and the 5 is the same, you hop down to your 15 second. Okay, and this is where you can start looking for your change in the state and looking for your pullbacks. Okay, so right in here, you've now got your breaker block, high, low, higher, high. Start entering inside of here. This is now balanced price range. Okay, all up inside of your higher time frame premium after your higher time frame confirmation. Right, now you're just looking for one thing and one thing only, and that is expansion down to your targets. Right, so if we hop back to our 5 minute, okay, hop to your 5 minute. Well, this candle here, this candle closed above this candle, which creates your 5 minute high. Well, this is going to be a downside of my new colorway. Sheesh. Can't see my candle. All right. So this is where you're just projecting out. So I now know that there's a failed M5 comp down here. So this is my doll. All I'm looking to do is take price back down to this doll, right? I have no interest in between the 262s. This is where you engineer liquidity, or the market engineers liquidity. So if you're entering inside of here, right, you're trying to chase price short or long, you're just going to be stopped out the whole time. This is where liquidity is generated, in between here. That's why I never enter there when you're in consolidation. You want to enter in a premium, drive price to a discount, and then hold runners out the low, right? So if I am holding from a premium, I'm going to pay myself inside of a discount. Well, if I'm trading a MACD, it's going to be all the way down here at 1x, right? Okay, which is going to take out my failed M5 comp, or I can hold down to 2, right? And then beyond there, just runners, right? Just looking to take out the low. So essentially, I am paying myself, entering inside of a premium, and then just going back out through the dealing ranges, right? So 15 second, now I'm looking for a 1 minute and a 5 minute discount, okay? Just ultimately looking to drive down to my objectives, which would be all the way down here, okay? Which is your 4x, which would take out the low, right? So if we just play this forward, all right, so wherever you entered in here, whether you entered aggressively on your 12%, anticipating your higher time frame soup, which is what you got, or whether you waited for your 15 second breaker structure because your 1 minute and the 5 minute is the same. If the 1 minute was inside the 5 minute, for example, right, it wasn't the same as the 1 and the 5, I'll just use the 1 minute, right? I'll wait for a 1 minute break, yada yada, change the state of delivery, and that gives you your entries, right? Or you can flip the dealing range over. That's something specific I talk about inside of Red Pill. But if your 1 and the 5 is the same, just go down to your 15 second and just dial in your entries on your 15 second. And now you're just looking to dial out. Your next objective is your 1 minute dealing range, or your 1 minute dealing range low is down here. Your 1 minute discount is all the way down here. It's all the way down here, right? It's the same as the 5 minute. So all I'm looking to now is to take it back down into a discount of the X levels with the confluence that we have a failed M5 comp. And I'm also anticipating them to shit on people who are trying to long on a Friday. All right? So your job's done now. All you're doing is sit in. You've entered in on the model. The rest is history. All right? The rest is easy. Let's have a look at the 5 minute. All the way back up to 12% again. It's pretty gnarly up there. Okay, so there's your first trim. There's your second trim. If you want to hold runners for your deep extension, it's all the way down here. It's where you're just sitting in it, just letting it play out. Boom, there you go. Completion of the model, right? That's your H1, sorry, your mechanical TS model short. Beautiful. On Friday, going from a 15-minute, 12% deep premium, taking it back into a discount, paying yourself, holding runners to take out the low, utilizing the mechanical TS to get in alignment with that. Anybody have any questions about that, by the way? Anybody have specific questions about that? Yay, Nate. No problem if not. I'm good. No. What was interesting here, this is actually the start of a reclaimed order block. So you could have utilized this for long. You could have utilized this for a long. Yeah, Friday if you were trading was, if you'd noticed this filed M5 con, all you were looking to do was trade short. If you'd noticed that, all you were looking to do was trade short. It's like, you know, the easiest thing on the world. But this is like a reclaimed order block. So with a reclaimed order block, it's very specific. You're always looking for the lowest down close candle on the sell side of the curve to be rebalanced on the buy side. Okay, that's always what I'm looking at. So the lowest down close on the sell side of this curve gets rebalanced on the buy side. That becomes your entry. So this is very specific. It's a reclaimed order block inside of an MWOG. So whether you entered, you could have entered in here. I mean, that's a very techie entry. But the same principle, waiting for your soup and then just entering on the rebalance of the reclaimed order block. This is bullish. Okay, this is bullish, a reclaimed order block. So for me, I would have been taking it up to my deep extension, which is right up at 6.5. Okay, so if you took this entry, you could have taken that. So reclaimed order block up to the final deep extension, which is that. So that's a reclaimed order block. Pretty specific. It's very similar to my 3 drives model, but reclaimed order block. So it's basically a mass accumulation of long positions, and that's keyed off this low. What else do we have? Yeah. Also, you got to be mindful. Just going into next week, you want to be mindful of this. This is my 3 drives. So drive 1, drive 2, drive 3. Into a higher time frame order block, which filled this inverted fair value gap on the daily. So yes, I am anticipating price to take up and take out 25,240. Without a shadow of a doubt, I want to see us get into 23,560 next week. So I'll be interested to see if we gap up next week actually. But this is a 3 drive, so I'm super cautious about this 3 drive. So what I'll probably be doing is looking to go short inside this order block next week, subject to context and time. So basically looking at the order block out the back end of the 3 drives becomes where you want to repopulate your shorts. So right in here, you want to be mindful of this series of order blocks right here going into next week, which is essentially what happened in Friday as well. So that was further context for your short. So 3 drives on the high. This is a mass accumulation of shorts. So you just want to be mindful of that next week. So I'm not going to be fighting through this high next week, but I want to see price go through that high. Basically, if we violate this high, it's more likely we're going to go drive out 25.40. If we come up into this OB and we start rejecting hard, it's more likely this is going to be the high for a good time. Likely to go on a big old sell-off. Let's have a look. What else do we have? Yeah, it was interesting because we've got 3 drives on the low. So essentially just sandwiched between the 3 drive and 3 drives. So again, same principle. You want to be mindful of the lowest down close candle in drive 2, which is this, which essentially if you were trading on right in here, I'll give you a context for that long. But yeah, essentially what we came back down to. So what I'm going to be interested is whether we have a fat gap up next week or whether they just open us up inside these 2-3 drives. Be interesting. Let's have a look. What else do we have? Trying to get used to my new chart. My new layout's kind of throwing me off. Can't remember what I traded now. What else do we have? Okay, so let's have a look at. Okay, so we can go all the way back down to, what day was this? Tuesday. Yeah, this was the Tuesday low of week trade. So again, principles of a Mackie TS on Tuesday. So exactly the same principle. For those inside Red Pill, you'll know that an H1 to M5, an old H1 to M5 and a 15 to 1 become classic support and resistance. So in the right context, they can provide support for why price is going to move higher, or obviously resistance for why price is going to move lower if you have reason for why price is going to hold that level. Well, funnily enough, this was all the way back down at mean threshold of the volume imbalance on the daily. So again, same principle, higher time frame sweep sets up a high probability lower time frame breaker block. So you could have entered, if you wanted a secondary, which would have been your PM session trade, or you're going to enter hyper aggressively into your position, which is how I trade, and then scale out. So let's have a look. Let's go back into here. Let's just do a little rewind. Let's grayscale this. Sheesh. Okay, so I remember this day. So this is what a yeah. Okay, I remember this little pappy. Where you at? I've just deleted my X levels, haven't I deleted my X levels. I've deleted my X levels. Come back. There's my X levels. Alright, okay. So. From memory, this was our 15-minute low. Or this was. Where was it? Where the hell was our 15-minute? What was that day? No, was it this day? Might have been this day. Let's have a look. Yeah, there was reason for my short to take out a 15-minute low. Just can't remember where it was now. So this here? I think it might have been in here. What's it? I think it might be this day. Yeah, I think it was Wednesday. Yeah, okay. So this was let me just get rid of this for a second. Okay, so up inside of here, this was an H1 to M5 model. Okay, so right in here is where we were going short. So I'm not going to go through an H1 to M5 model. It's on my YouTube channel if you want to go and study it. So this was your SIBI in an H1 to M5 model for your short. Well, if you're trading the H1 to M5 model, right, your stop's going to go above the 5-minute high, which create this 5-minute candle that creates your SIBI in your H1 to M5 model. And then you're going to target an M15 discount. Let me just get rid of this. Where the hell's our M15 gone? Yeah, so you're going to target an M15 discount. Okay. So right in here, these are your X levels on the discount side of your 15-minute dealing range. Then you're going to target your runners for the 15-minute low. All right, that is your H1 to M5 model. So the same principle that we were just talking about on the high in terms of being at a higher time frame premium to go short. Exactly the same principle. So what day was this? So if you notice in here, this is a deep premium on the daily, which is where we were. All right. Just get rid of this. So 21% on the daily, right? This was this day. So 21% on the daily. So aligning your models and your PD arrays are with your PD arrays with your high time frame X level. So this was 21% on the premium side on the daily, H1 to M5 model. Well, if you're trading this, you're paying yourself inside of a discount, holding runs to take out the low. That is your model. That is the model. Okay. But then once price fulfills the objective and it takes out the 15-minute low, you're going to anticipate a pullback. So when an H1 to M5 completes, you're going to anticipate a pullback. Exactly the same as a 15 to 1 model. You're going to anticipate once it sweeps that low for it to pull back. 9 times out of 10 it will do it. Okay, so if we now find ourselves having taken out an H1 to M5 model short, and we've gone down into the 15 low and swept it, which is the completion of your H1 to M5 model, yet we've found ourselves in an old H1 to M5 model, which is now what we know as support, we can anticipate a pullback. Okay, there's also other confluences we can put in there in terms of standard deviations, but I'm not going to go into that now. So what we can anticipate, especially at 11:30, is a London close reversal. So London close reversal, we're going to be immediately seeking 50% of the daily range. Okay, so your daily range is your Asia high to the low. Yeah, it's subjective, isn't it? You know, I hate some people's colors. I can't stand a gray screen or a white screen. I just can't stand it. But, you know, horses for courses. So again, same principle. You've now got a 3 drives on a low, which is set up. And I remember from memory, we had a new Mackie TS on this low. All right. So same principle, you're going to start measuring out your extensions, 1x, 2x. If you want it to hold for 50% of the daily range, that would be your long-term objective, which is all the way up at 1949. So let's see how this plays out. So again, same principle. This order block is what you want to be mindful of if you're taking longs. Yeah, I think this was weird. This was an odd day, yeah. So the 5 to 15 was the same. So the same principle of waiting for a lower time frame break in market structures and then trade up into your 5, etc. Would have meant that if price reversed from here, your 5-minute high was all the way back up on this high. However, when the 5-minute closes below that low, it's going to validate a new 5-minute low, which will put in a new 5-minute dealing range. So I'm assuming at some point here, it's going to flip into a new 5-minute DR. There you go. So when the 5-minute closed below that low, it's now put in a new 5-minute dealing range. So this is now if you're trading on the principles of X levels, so that essentially came back, closed below, creating a new dealing range. This is now your 5-minute high. So if you're trading with X levels, the 1 and the 5 will become where you're now seeking to take price out. This is a premium, right? Because this is a bearish dealing range. Going outside of a premium on the X levels, if you want to pay yourself inside of a discount, whole runners take out the high. That's essentially how I trade. If I'm trading hyper aggressive, all right, and then I just hold runners for my terminus, okay, from my deeper extensions. So my first objective, 1, and then 2. Okay, purely off the principle of the H1 to M5 complete into an old H1 to M5, there's also standard deviation confluence. Also, with it being a London close reversal, 11:30. So the principle of a London close reversal is you don't want to see any sweep. That is essentially what the London close reversal is going to go and do. It's going to go and sweep out those who are holding the bag. So you're anticipating it to expand. Okay, so now inside of here, this is where I'd start if I was looking for an order block out the back end to now support price for higher price for continuation, essentially. That's a horrible little wick. Okay, so inside of here is where I'd be going, okay, well, this is my lowest down close. right? So this is essentially my order block that I'm looking to frame price off. This order block right here. Okay, so boom, that would trigger me into my long. So you can see the 1 and the 5 is the same, right? So we're currently inside of a premium on the 5 and the 1. It's dipped down into fair value on the 5. We're inside of a deep discount on the 15. All right. 15 is still down here. It hasn't closed below it, so this is still your 15-minute dealing range. That's down into a discount. This wouldn't put me off because it's this order block out the back end that I'm mindful of. This is that essentially with the 3 drives, this is your housed order block. This is your hidden OB. And then for continuation, you're looking for your order block out the back end. So this doesn't bother me if it dips back into that. It doesn't bother me at all. This is where you start looking for your confirmation for your trade. I'm sure there's a trigger in there. You've now got your 3 OBs, balanced price range. I don't want to get too techie today. So right there would be TP1. Okay, right in there, bish bash bosh. And then going up to 2x. This is where, you know, a lot of traders chase this kind of stuff. This is where if you're not in it, you've just missed the trade. So there you go. That would complete the trade. Bingo bongo. So the only thing I'll be doing now is potentially holding runs to take it up to 50% of the daily range. So if I trade a London close reversal, once I hit 50% of the daily range, I stop trading because price is more likely to consolidate. But here, 2x, I'd have 95% of my position off anyway. So let's have a look. So we now know in terms of X levels, right? We've swept the low in an H1 to M5 model, anticipating a pullback in sync with a London close reversal with support of a 3 drives, trading price higher, back up towards 50% of the daily range. Taking it up to 1x and 2x of our extensions. So now we've gone back up to 62. So if I was trading this, I would want to be mindful of 62. And the reason being is because if price is super heavy, it's going to reject 62, right? Okay, so this is essentially going outside of a discount when price is heavy. Okay, so don't forget, you got the premium side, discount side. If price is super heavy, it's going to go outside the discount side, so 62%. And there's a way to trade it. The first thing is you want this to hold. Okay, so for a bearish continuation, you then want to see the low be taken. All right, so the low gets taken, gets swept. At which point, 88 and 79 is where you look to frame your entries short for continuation. It's a 3-step process. It's my discretionary continuation model using X levels. Then at a later date, this then becomes your dole. I know this all sounds techie, but it's true. Essentially what we traded on the daily. So this needs to hold, needs to take out the low. Price comes back up into 88.79, trade continuation. your first objective will be to take out that low, and then you're going to go down to your final objective. For those inside Red Pill, you'll know that this was my point of interest all week, last week. My line in my sand, 15-minute order block. So sort of. So for me personally, I wouldn't trade this short, and the reason being is because of the 3 drives on the low. I always like to trade in alignment with it. Plus, you've got the London close reversal, where 9 times out of 10 is going to go up to 50% of the daily range. So if I had runners left, I'd just look holding runners. My lamb to slaughter would be below my entry. Okay, can you see there it's taken out that low? So right in here is where you would start framing your entries short. Right, now there's reasons for it, for those inside Red Pill, right there. For your continuation, you're not anticipating price to come back up to 62. It's a sign that price is heavy. So if price is heavy, you're trading with that principle that price is heavy. You're not anticipating it to come back and sweep liquidity, right? You're looking for it to go out of the discount side of that higher time frame dealing range, so 88.79. So that would be your entry short, and you'd be looking to first target that low, and then just hold for your deeper extension. Which is what you get there. So this now. I now know in the back of my mind, this is a doll. Just purely using X levels. Like, I know that that's a doll. I know price is going to come back for that high. Okay? I know. Almost like 100% of the time. That's how confident I am with it. So all I'm waiting to do is to define an entry to go long. Okay, so this is where we actually came back down to 50% of the daily range. So this created the low of our week. Right, so 79% on the weekly, daily 50%. It was also inside of 50-minute OB, supported, housed 3 OBs and a fair value gap. So right in here, again, is where we could start anticipating price to revert. So again, I would be looking for this high to go. That would be exactly my doll, right, that high, which, funnily enough, aligns with it being the 5 and the 1 minute high. So again, let's play, see what happens. What time is this? 2 o'clock, 2 p.m. reversal. For me, if price just fell that high there, for me it'd just be like just complete money on the table. I traded this on this day. This is very low. So let's play it. Bingo. So again, for those inside Red Pill, discretionary model, bog standard. So it's essentially offset accumulation. So if price is ever going to offset accumulate, 9 times out of 10, it's going to offset accumulate out of the 5 minute premium or discount, depending if you're bullish or bearish. Okay, so if you're bullish, what will often happen, I bet if I hop down onto a 15-second chart, let's have a look. Because the 1 minute and the 5 minute is the same, right? So as I mentioned earlier, if the 1 and the 5 is the same, you have to go to your 15-second. So what you're always looking for is your breaker structure on your 15-second. Well, there you go. See you later. Okay, so you've swept the 1, break your 15-second. This is where you find your secondary entries if you want to trade them, breaker blocks, yada yada. And then you're going to trade back up. Let's just hop back to the 1 minute. And so I have a 15-second pane open, which is my execution chart, which is what I look off. So again, you've now had your 15-second breaker structure. Your 1 and the 5 is the same, and you know that this is the dole because this is the old 15-minute continuation variation that you know price is going to go and revisit, right? So again, you have to know why your low is going to hold. You have to know why price is going to drive out your high, and you have to have an entry model, okay? Well, you know why price is going to hold the low, okay? So this is a fill on the daily volume imbalance. It's 50% of the daily dealing ranges with the X levels. You're inside a 15-minute order block. You've got a potential for a 2 p.m. reversal, right? So you got it all in your hands. You got an old M15 continuation for the dole, and you've got your discretionary for a potential long, okay? So your high, your low. If price is going to offset accumulate, it's going to offset accumulate from the 5-minute premium or discount, depending if you're bullish or bearish. Okay, so this is your discount, right inside of here on your 5-minute. This is your premium, okay, because this is a bearish dealing range. Okay, so if you want to be going long, you're going outside of a premium. So price comes back up into a discount on the 5, goes back into a premium. This is offset accumulation. So this is where you can find your secondary entries. So if you wanted to trade your little inverted fair value gaps, that's entirely up to you. All right, for higher prices, there's also a 1-minute breaker block, unicorn, balanced price range. I don't want to get into techie stuff today. All right, so going outside of your discount, premium, driving out your dole, take out your 5-minute high. I wonder, does this go up to 50% of the daily range? Funny that. So again, same thing. You can do this on this low. So from this low, this high, if you're looking for range expansion, one X, 2X. It's not a MAC TS though. So it's finally how we get up to 2X. So this goes into your overnight. Bingo. Okay, so if you're a swing trader, it was a great swing trade. Well, it depends. Where's it actually open? Take that back. There's the fulfilling of your 2X. That we covered. Is there anything that you guys want to ask me about? Otherwise, I'm just going to wrap it up there, guys. It's going to be my little session for today. I know what took place on Monday and Tuesday. I don't want to go over that again. So MAC TS short on your Friday, MAC TS long, using the discretionary model for your entry short, but also confidence for your long. H1 to M5 short. All keyed off Wednesday's low, going into 50% of the daily dealing range on the high time frame X levels. So where we are going into next week, we're obviously inside of a deep discount on the weekly, but we're in a premium, on a deep premium Well, this actually should repopulate. Depends where we open next week. But this could be our new dealing range low starting next week. But we're just opening up inside the 2-3 drives, which isn't ideal, right? So there's 3 drives on the low, there's 3 drives on the high. So there's a battle of the 3 drives tomorrow. Can you show again the 15-second boss from the low in the 15-minute OB? Down here. Yeah, let's just rewind this. Okay. Trying to get why the markings come off my chart. Okay, so let me just rewind this to okay, so if your 1 and the 5 minute is the same, okay, it's not always going to be like that, okay, but when it is, you're going to hop down to your 15-second. So the 1 and the 5 is the same. Often you'll have it where the 1 minute is in here. All right, so this will be your 1 minute high. Okay, and this will be your low. If that's the case, you'd wait for, or if you're trading your secondaries, there is ways to trade the primary, but we're talking purely utilizing breaks of structure here. Wait for a break of the 1 into your 5 minute discount. You'd wait for offset accumulation back into your 5 minute premium. It's inside of here where you'd anticipate your continuation. Okay. However, in this instance, you don't have that. Okay, you've got a 5 and the 1 is the same. So this is where I would hop down to my 15-second and wait for a 15-second break of market structure on the low for me to drive higher. Okay. Well, in this instance, all of this is your 15-second high. Right? This isn't a swing high. Right? None of this is a swing high. So none of this isn't violated. So this is still your 15-second range. Okay, it's only here when that high right there puts in that low do you create a 15-second dealing range, a new 15-second dealing range. That's bearish, right? That high was your former 15-second. It hasn't broken. That has now broken that low, validating this is your new 15-second dealing range. So if I was bullish, I'll be waiting for the 15-second to break from my higher time frame point of interest, or what I'm doing is I'm entering hyper aggressively and then I'm waiting for that and then looking for my triggers that I teach inside Red Pill and trading accordingly. But if I'm purely waiting for the break of market structure, you're going to wait for the 15-second to break. All right, we know that's our 15-second. There's other stuff we can overlay it. We've now got our 3 OBs, yada yada. Okay, so this is where on the 15-second, okay, well, we've now got our break of structure. We've now got our low, high, lower, low. We've now got breaker block. Okay, but we know we're inside of a deep, deep, deep premium on the 5 minute. Okay, so this is, if you are bullish and you're in a deep premium, this is where price is likely to expand out of, right? After having just swept the 15. Does that make sense? So now you'd just be doing the same thing. You've now got your 15-second break. You're going to look to take price up into a premium if we're purely using the principles of X levels, right? Well, the premium on the X levels is right there on the 5. So that's where you pay yourself. Inside of here is where you can get offset accumulation. So price comes back and sweeps those who are chasing the price, right? So pay yourself inside of here. Right, you can even terminate your trade there. If you took it off that breaker block from 19,709 up to here, you've just taken over 100 points out of the market. I'm showing you how to trade range. But if you wanted to hold, you're going to have to sit through and weather a pullback. All right. If at this point in time I knew that my M15 discretionary continuation model had not revisited that high yet. It is like, it's like hoovering up money. It's like it couldn't be better. Because I know price is going to take out that high. You know, sometimes when that opportunity comes and you're just like, you know, this is just absolute no-brainer. You know, I can't not take this trade. You know, this is an example of that. So inside here, you've now got your inverted fair value gap on the 5 minute. But more importantly, you're doing the offset accumulation. Okay, so 5 minute discount back into a premium trade long. Bingo. Done. Thank you very much. Thank you very, very much. Any other questions? I'm going to chase the last bit of sun. Alla good. Alla good. All right, guys. Well, yeah, my little recap for Sunday for this week. I have to see where we open up on tomorrow. Be interesting to see where we sit in terms of those 2-3 drives. At the moment, I'd like to see us get into at least 23.56, which is the 15-minute doji, that little 15-minute order block sat just above. That's my first-time objective. If we do violate that, I'll be looking up towards this high as my weekly objective, but not against us having a deeper pullback before we do that. So yeah, to see where we open up, and we'll go from there. All right, guys. So enjoy the rest of your days, and I'll catch you tomorrow. Abosh.